Hello and welcome to today's podcast. This is Filthy Clean Pod number 8, and today I'm here with Conor Bentley from ExpandAccounts. Welcome. How you doing?
I'm doing great. Thank you for having me.
Thank you for coming down. It's really good to meet you.
Yeah, you too.
Today obviously we're going to talk a lot about accounts, and you work within the trades, and you give advice, and obviously you've got customers in that area. So it'd be great to hear what you can do and how you can make people be more tax efficient and all that jazz. So
Absolutely.
Yeah, it'd be great to start from the beginning and maybe give an introduction about yourself.
Yeah, so I'm an accountant, simply put. I've been an accountant since 2019, about 5 years now. I started with obviously an employed role, an apprenticeship, worked my way up, qualified in that employed role, and then essentially set up on my own, but not in accountancy, in a trades-based businesses, an exterior cleaning business like yourself. Set that up with a friend. About 6 months in, my friend, he didn't like it too much, so he dropped out, and then I took it on and got my hands dirty, and got stuck in as needed. The plan was for him to do the stuff on the ground, like we were saying earlier. Yeah. And I was to work on more of the strategic stuff. But like I said, he didn't like it, so I stopped. He stopped. I took it over, and I took it on from there. And what was great about that is before I started this exterior cleaning business, my brain was finance, accountancy, and that gave me. The exterior cleaning gave me a much different perspective on business as a whole, rather than just looking at things from the numbers, the tax. Because an accountant, really, their job is to format numbers in a way that HMRC and Companies House accepts. Whereas if you ask most accountants about anything to do with business, they'll think about the numbers straight away, just because that's just how we grow. That's just how we grew into our profession. That's just what we know. And the exterior cleaning business taught me so much more about people, customers, marketing specifically, sales, everything that actually makes up of a business rather than just its finance function. So now I've used that now. So I'm obviously I own ExpandAccounts and work with trades, construction industry only. And I've used that experience to be able to use accountancy to be able to ask the right questions in different departments of people's businesses, like marketing, like sales, like recruitment. That's pretty much an overall short form of my story, how I got here. Okay. Yeah.
So how long did you do the exterior cleaning yourself then? Like, because I think you said you started it in 2022.
Yeah.
So it was only a few years ago.
Yeah.
I think you said earlier that you worked in the corporate environment. You thought you'd like to get your hands dirty, then went straight back to the corporate environment pretty quickly.
That's it. Yeah. Yeah.
But no. So how long was you actually doing that for on the tools?
Yeah. So December 22 started the exterior cleaning. That's when we incorporated. We got started straight away. And I mean, it's still running. It's still running now. I transitioned full time into my accountancy practice around just over a year ago. Yeah, just over a year ago. Transitioned from the exterior cleaning so basically I sold all the equipment in the exterior cleaning, some to my employee and some to others. And any work that comes in now, I just pass to the ex-employee subcontractor. Okay. So it's still running, but from. Yeah. What was your question again?
The question was, how long was you doing it?
How long was I doing it? So, December 22 until now. But I come off the first year, it done just over, like I said, 117K in turnover. That was mainly me. So at the start, the first 6 months was me and my business partner. Okay. And then from there, it was, after 6 months, it was just me doing it until it's still running now. I have admin doing like just replying to quotes and sending them to subcontractor. Okay. Just take a bit off the top, really.
So you're not doing the work now, are you?
Oh no, I'm not doing the work. No.
So that's what I'm saying. How long was you doing that work?
Oh, me actually on the tools. Probably around a year.
Okay.
Yeah, so I was managing it, but I also had like a couple of staff as well at the same time who were doing most of the work, and I was trying to make a habit of not being on the tools.
I was just trying to get an idea of, because you said that, it gave you more of an idea of running a business, because accountants, that's my experience. Is a lot of them just look at balance sheets and how well things are doing. Obviously, which is what you need, but from an entrepreneur's standpoint, we're built to kind of grow and to develop and to move forward. So yeah, I was just trying to get an understanding of how long you'd sort of done that, done the hands-on type thing that gave you that insight,
Yeah.
So 6 to 12 months, you were saying.
Yeah, about a year. About a year I was on the tools, but like I said, I had a couple of members of staff at the time. And tried to make a habit of not being actually doing the work so much. But if I had to, then I did.
Yeah. I mean, that's definitely the experience I found is getting yourself off the tools as soon as possible. If you want to grow a business,
Yeah, it's impossible to do everything. It's you're either the technician or the business owner. It's very hard to be a good business owner whilst being a technician. It's very hard to be a good technician whilst being a business owner as well.
Yeah.
You have to kind of choose one or the other and take it from there.
Okay. So we were talking a little bit about as well. So new people coming into business and how to get yourself set up and structured. What would your advice be there?
From tax and accountancy point of view,
yes.
Getting structured. Do you mean like between a difference between sole trader, limited company? Is that what you're kind of asking?
Yeah. So how? So if a newbie coming into the industry, into the trades industry, whether it's I don't know if there's similarities is there between trades, as in I guess plumbers and stuff like that,
HVAC,
to like exterior cleaners.
It's the same,
yeah. So from a tax planning point of view, what guidance could you give from anyone really, from a sole trader to someone who owns a limited company? What's your sort of standout points?
So I've got a lot on this. The advice will differ individual by individual, company by company, and depending on business size. But I'll just start with least powerful, and I'll go to the most powerful ones that make a little difference, and ones that all the way to the ones that make the most difference. So, firstly, you've probably heard a lot of some of these, and that's firstly mileage. You can claim 45 pence per mile on any mileage that you do for the company in a personal vehicle. You have to track it. It's not gonna change the world. It's not gonna change much about your tax, but you can claim 45p a mile as an expense against your tax. That's number one. You can do that for the first 10,000 miles, and that's even if you do 10,000 miles. That's £450 as an expense. It's not gonna change your business. It's gonna give you about £90 in tax back. So that's the probably least powerful. One thing that a lot of people don't do is a portion of the home expenses, the bills, personal bills. So, for example, if you rent your personal house, because with mortgage you can claim mortgage interest, so it's a bit harder to give a demonstration there. Rental property, you've got rent, council tax, bills, electric, telephone, your normal bills. So let's say you spend £2,000 a month on your personal bills. So you've got 3 bedrooms upstairs and you've got 2 livable rooms downstairs, workable rooms, not kitchens, not bathrooms. 5 rooms in total. You spend £2,000 and use one of those rooms for your office, for work. It's only used for business purposes. So you've got it set up as an office. You work from there. It's not used for personal life. You can claim one, because there's 5 rooms and you've got one as an office. You can claim 1/5 of your personal bills, £400 a month, which is like £5,000 a year. So that one's good, but that's for that situation. If you have a mortgage, it's different, because you can claim like mortgage interest. Then you have to be careful about capital gains tax and having a room dedicated to that. Then, so the best scenario is if you rent a house, basically.
Okay.
Simply put. Obviously, there's caveats and stuff, so I'm just going to give general advice. But yeah, that's £5,000 a year in that situation. The good thing about this is it's a business expense. You claim it as an expense, but it also goes against your director's loan account. So, because you've paid it personally, but it was for the business. So you've introduced that money to the company, essentially. And why that's good is because that means you can declare less dividends. So you benefit from the corporate tax point of view, and you benefit from a personal tax point of view. Overall, in that situation, it'll be around 50% you'll claim against tax, both corporate and personal. 2,500, that's a decent deduction that a lot of people do miss. And when I tell people, like, I've never heard that before, you can do that. Or the accountant claims like the £312 allowance a year, which obviously, again, it's not going to break the bank. It's not going to do much for yourself. Other ones, tax deduction. So this is all. I'm just explaining all the things that people aren't aware of. Because if you implement this, you're as tax efficiently as possible. People come to me and say, I don't want to pay any tax. But
That'd be good.
Yeah, I wish, I don't want to pay the tax either, but it's part of owning a business.
Yeah. But it is trying to find everything you can put against it to, bring that bill down as much as possible, isn't it?
Yeah, because if you can pay it to HMRC, you can pull it into marketing, and I don't know which way I would rather it go.
Yep, so do I.
Yeah, exactly. So that's mileage, home office. Obviously, you've seen I've got an electric car.
Yep.
That's a good one, because the thing is, it's not just about tax, it's about overall money saved. And if you're growing a business, if you're at the start of a business, because you've mentioned people coming into the self-employment business owner, you got to be as smart with your money as possible. Tax is just one piece of that pie, So electric car, it's great because if you have like a car finance bill personally, you got to pay for fuel, repairs, everything there has got to come out after you've paid both company and personal tax, dividend tax usually, or if you're on a salary, whatever. But with an electric car, you decrease the amount that you need personally as well, because you don't have to pay. It all goes into the company. All the expenses go into the company, all the repairs, all the not fuel, but electric,
Energy.
Yeah, energy, and the actual car itself, the payment itself, if that's finance, whatever, if it's paid outright. So that's a good one, because again, like that home office, it decreases the amount you have to declare on your personal return, as well as being an expense in the company. So where you get those double benefits from personal and company tax, that's where you find the most benefit. Electric car is great for this. I bought a second-hand one. With second-hand, you can't claim all in 1 year. You claim 18% a year as an expense. But if I bought a new one, then you've considered depreciation. So like I said, it's tax is one part of the pie. Overall, that's where you've got to look at tax, depreciation, actual money saved. Electric is cheaper than petrol, diesel. Mm-hmm. So whilst you're building a business, it's obviously thinking about, I don't want to pay any tax. No one wants to pay the tax, but we just got to be smart with it. So electric car's good.
If you're building a business, though, realistically, going out and getting cars on finance and stuff like that isn't great anyway, is it?
No,
you want to keep everything as small as possible,
Mm-hmm.
When I first started window cleaning, the van that I had and the system I had was worth £2,000. Everything was just done as cheap as possible. And personally, what you said there about marketing, that's where I'd be trying to fire money, is just trying to grow as quick as I can, or, at least to try and get a livable wage or whatever it was. But yeah, it's so I understand the tax efficiency. It's a bit like years ago, it doesn't seem to be marketed this way so much anymore, but people like, I don't know, I'm going to say Ionics. I'm an Ionics fan, so I've got no bad word against them, but I know that they used to say about it won't cost you any money because obviously you can put it against your tax, like the lease, But I was like, well, it's still 500, 800 quid a month or whatever it is, regardless of a tax bill. You want to keep that as low as possible. And if you can go and buy yourself an older van and an older system, get that client base going, then obviously it makes more sense.
It's about increasing your take-home income.
Yeah.
At the end of the day.
So getting over that hump is the one, is making profit first, isn't it?
Yeah.
Before you start spending to try and reduce tax. Does that make sense?
Yeah, I think that's actually interesting you say it, because that's actually, so that saying on its own annoys the hell out of me, saying that just buy it or go against your tax, because it's not actually how it works at all. Yeah. It just decreases your profits. So your tax, when you go from salary, you're taxed on every month, Employer pays it to HMRC.
Yep.
When you become self-employed or a limited company business owner, you tax on your business profits, where sales minus all your expenses, your profits. All adding in expenses is decrease the profits. You don't claim it all back. If your tax rate is 20%, you get it for 20% cheaper, essentially, because your tax decreases by 20% of that cost. Yeah. So that's a very common misconception. Just buy it and it'll go against your tax, or don't mind, just put the van through, get it against your tax. Then you realise you've still got a tax bill. You've got no money in the account because you've spent it all on this van.
It's an overhead, isn't it? Do you know what I mean? It's overhead, it's an overhead at first that you just don't need, especially when you're starting out. Unless you've got a big pot to start with, and you know that you can invest whatever you can invest. If you're starting out, 9 times out of 10, maybe you got a bit of money, but to go and spend it frivolously on on an asset that you don't really need. Equipment. I know it's a tool at the end of the day, but it's to try and sort of maybe keep that down as much as possible, unless you can afford it, and you've got the money to back you up. But yeah. So have you got any more points on tax savings? Or?
Yeah, absolutely. Obviously, common one is have partner, family who don't use a personal allowance, put them on a payroll. You do have to do some work. You can even get, so for your industry specifically, leafleting is obviously a big one. As long as you pay someone a market rate, HMRC see it as it's fine. You're just paying. It doesn't matter that you're family or spouse or whatever. If you've got kids, you can do it with kids as well. Pay your kids.
Can you really?
Yeah, it's fine. You can do
that. Let me write notes.
Yeah, you can do that. As long as it's market rates, that's how HMRC see it. And yeah, I mean, market rate is obviously subjective. So it's
just about to say that. How much can you pay a 14-year-old?
Yeah, 500 a day.
Sounds all right.
Yeah, but yeah, you can do that. So partner, mileage, home office, electric car. Now those, like you said, you can't just focus on tax. Tax is a very small part of a business. It's actually not really any part of the strategy of a business. Marketing, sales, recruitment, those are much bigger things than tax. Finance is big, but tax on its own is not the right way to just focus on purely. So once you start growing, the big one, so I'd say this is probably more for like businesses your size and bigger companies than just one-man bands. But it's still husband and wife, good healthy profits. It's still relevant now. Pension contributions. Now, there's this good pension that you can use, a SIP pension, SIPP pension. It's just a self-administered pension, essentially. You can decide where the money is invested. So say this unit that we're in, this office that we're in, if you were to buy it in the company name, your company is obviously trading, it's open to risk, it's open to lawsuits, and then if you lose a lawsuit or you kill someone off a scaffold tower or something, that lawsuit can obviously destroy the business. And then once this asset's on the balance sheet, if you own this office, that's open to be taken, sold, and sold to cover that bill. Whereas if you funnel this these into pension contributions into this SIP pension that I'm talking about, you can buy the office in that pension, so it's completely separate to your business. And this is especially important if you already rent a premises. If you rent a premises, you're already paying the whatever. Say you pay £1,000 a month in rent to landlord. You start investing in your pension. You've got enough over time. You've got enough in that pension to buy this office. You can still rent the office from yourself, from your pension, who owns the building. So you not only get your pension contributions as a tax expense, as an overhead, which decreases your profits, decreases your tax. That £1,000 a month was market rate again, so you can funnel that into the pension. So you're now extracting. You've gone from just working in a business, keeping the profits, but now you're extracting personal wealth, which is a main reason, a big reason a lot of people start. They want to build an empire.
How would that work then? So I know that, for instance, we've had conversations around that, especially in the last unit that we were in, that was actually owned by like an individual. So we rented that from that individual, and he actually put it across to us to potentially buy it. Now, we really did consider that, but the problem is obviously we outgrew it, and then we thought, do we really want that asset to then rent out to someone else when we're not there? And the answer was no at that time, But I know that he set it up where he had his own limited company with that asset in, and then obviously had his own business with his own limited company. So how would you set it up as a pension?
That's probably the next and last point for tax efficiency. That structure, so called a group structure. This SIP pension is separate to that. This pension is just like I said, you can choose where the funds go. The money in that pension, you can borrow 50% of how much is in there, and you can choose to buy only commercial property. You can't buy residential property. Like, it is important to speak with a financial advisor on this, of course.
Okay.
Accountancy is more tax business, but these are the rules. These are the tax rules. You set that up separately. Like, I think your question is about the group structure, but just to explain, the pension isn't within that group structure.
Okay.
You put the money in from your business, you pay up to £60,000 a year. Once you've got enough, you buy it in that pension and you rent it. And the good thing about this is if you ever sell your business or the business goes under or it's, you get late payments and cash flow, you have to close the business. Now that you still own that thing in that company and you can still rent it out and it's still tax efficient. The income's not taxed because it's in a pension.
So I'm trying to keep up with this, and I knew it would be like this today because obviously having an accountant in front of me, you're going to be sharp with your figures.
I tried to. I should be, shouldn't I?
But so are you saying then that if you build up a pension pot to use that pension pot to buy the business, or are you saying to go and take out a commercial mortgage, and have? I don't know, and that's a bit I don't understand the accountants.
Yeah. So you don't buy the business; you just the pension owns the property.
Yeah.
And now you was renting to the random guy.
Yeah.
Who you're building his personal wealth, or you could build. If you still rent it, the business still rents it, but into the pension. So that £1,000 a month.
How do you set that up? That's what I'm trying to get to.
You speak with a financial advisor.
Okay.
So the financial advisor sets up the pension and it helps you with solicitors and stuff like that.
Okay.
Yeah.
And then so that's what I'm saying. Do you take out a commercial mortgage within that pension to pay that off? That's the other point I'm trying to get to.
Yeah. So you can only, so if you got 100 grand in a pension, for example, like I said, this is for more bigger businesses.
Okay. So that's what I'm trying to say. So if you've built up money in a pension pot, then you can use that pension pot to go buy the
unit you're renting,
or take out the deposit to then pay off future payments, whatever it is.
And you can borrow 50% of what's in there. So if you got 100 grand, you can borrow 50 grand.
Okay.
And then you've got 150, or if that's the numbers in there.
Oh right, I get you.
I
understand.
Yeah, it's not like a 10% deposit.
So you got to build up to that pension pot first, though.
But you can if you've got a lot of, like I said, this is for more bigger businesses.
Yeah.
So those other deductions were for the smaller companies and the bigger businesses, of course. But this one and the next one that you just mentioned, the group structure, is more for a bigger business. Okay. But yeah, it's great thing, and you can use unused allowances. So you get 60 grand a year. That's gone up recently in the last couple of years. But if you've had a pension set up before, you can actually say if you've got like 180 grand that you haven't contributed for the last few years, you can put that into the pension if you're flush with cash.
Okay.
You can put that into there and instantly buy it if it's only worth within how much unused allowances you've got.
Yeah.
So instantly you get however much you can contribute as an expense and decrease your profits massively. But it goes into your personal wealth, which is the whole point of having a business, really, isn't it?
Yeah. Well, yeah, you're trying to get out the other end, aren't you?
Yeah. You go in to have all the hardships, so then at the end, it's better.
That's what it's all about, and we talk about it enough, like with the pain and the crap and everything you go through. It's
every day.
Every day,
all day. Every day.
No, it's easy though because I just sit at home. I'm a director and I don't do anything.
Just collect the money.
Yeah, what money? But but it's all about that future, and that's what we focus on a lot. Obviously, we're growing and everything else, but it's obviously we look at you've got that eye on the future of where this is going to come out and everything else. So have you got more sort of tax saving strategies there, or?
Yes, I would say the next one, I've probably missed a couple of small ones, but just like life insurance to replace the directors and key principal insurance. But the next one and the one after that. So now you've grown your business, you've opened that pension, you're maxing out those contributions, and you're investing in commercial property. Now, once you've maxed out those 60k a year, if you've got two directors, 120k a year, perfect, even better. The next thing, if you want to carry on investing in like residential property, because that's a natural progression point. You make all your money in your trading business, you kind of max it out to where it's kind of growing on its own, a little bit running on its own. You funnel money into, and now you start thinking about personal wealth. Commercial property in your pension is obviously a great one. And then that group structure, how that guy done it, your old landlord, what that is instead of you owning RedClean personally as a 100% shareholder, you set up a holding company. So you might have heard of holding companies before, it's just a separate limited company who owns RedClean. So you set the new company up. You have to do. It's a process to set up. It takes a month or so usually, and that so that holding company now owns your trading business, RedClean in your example, and now you set up another property company. So The good thing about this is, say you've maxed out those pension contributions, but you've still got every month cash building in their account, and there's nothing to do. If you don't want to grow the business anymore, you want to maybe invest in other businesses or residential property. So a good one for this example is like, say you've got a plumbing company, you work on big contracts, and you've done really well. Profit's great. You've maxed out those pension contributions, but one of your biggest expenses is subcontractors in other fields like electricians. So you build up this pot of cash. You've like I said, you've already done this here. Now you buy an electrical servicing company. So now instead of that being an expense, you just move it over to your new company and it's profit. You actually gain a profit there. So you get the labour at like cost essentially. So yeah, the group structure is a separate limited company. You've got to think of it like a triangle, like a separate limited company who owns the RedClean and owns another property company, and then maybe owns businesses that you're buying. So you move into like acquiring businesses now.
Okay.
So this is like a natural progression. You grow the trading company, which is obviously the step number one. One of the biggest hurdles. Actually get it to a point where this is a problem. You've got too much cash. Everyone dreams of this.
That'd be lovely.
Everyone dreams of this, you know.
Anyway, we can dream.
We can all dream. So you've got too much cash now. You've maxed out your pension contributions. Now you start looking to buy businesses, maybe buy other exterior cleaning businesses, window cleaning rounds. You start acquiring businesses with excess cash. The reason you do it under this group structure is because when you buy a residential property or a business, it's you buying it. So you have to take the money out of the business. And obviously then you get stung with personal tax, dividend tax. But within this structure, that holding company who owns RedClean now owns the businesses you acquire or the property company. So you can funnel money up and back down, and you completely bypass that personal tax. So say you earn like above 50 grand a year, you're in a higher rate tax bracket. Are you following, by the way?
Totally, yeah.
Good
Cool,
stuff.
cool.
I might be jumping to conclusions.
No, I'm following. Yeah, following.
Good stuff. So, yeah, where was I?
So
You
were
got
saying
50 grand.
Yeah,
You weren't over 50 grand. You're in a higher rate tax threshold. Every pound you take out of business to invest in property, you lose 40p. You lose 40%, so whatever your tax rate is. But within this structure now, you just build this personal wealth without going. It's not in your personal name.
So you say about building this personal wealth. I mean, I know we're probably going way off here because we're now talking like we're Duncan Bannatyne and whoever
it's
else.
It's actually not. Yeah, it's not. It's really not.
Is it not?
Yeah, a lot smaller businesses do this.
Do they really?
Yeah,
okay.
Because it's a long-term strategy, especially residential property. A lot of people go down this route.
Well, where I'm trying to go is that, okay, so what are the tax implications though, as you go down them rabbit holes, as the main principal business holding company then starts taking on all these other companies underneath it? Obviously, there's still going to be tax implications at some point, is there? Or are you trying to say about creating wealth? Then obviously at the end of it, that's obviously when you're going to get hit with tax, because at some point you're going to get hit with tax, aren't you? But
to an extent, yeah. You so it depends how much personal income you need to live your life as well.
Right, okay.
Because it all stays within that holding company. The holding company owns RedClean, property companies, and then maybe if you start buying businesses, you get hit with the tax at probably the inheritance tax level. And so or when you withdraw money. So you either withdraw money personally, so you go on holidays, you start splashing out. And that's when you start getting tax. But whilst you're building, instead of the tax going over to HMRC, it goes into building that wealth.
Yeah, I get that.
So now you can, once you've built that empire and you're happy with it, then that's when you start looking at taking the money out personally, and maybe you up your personal income, live a better personal life. But yeah, I mean, you can do it also if people take out 100 grand a year or whatever. So it's whenever you either take money out or it gets passed on.
How would that be more efficient than just concentrating on, say, our business, for instance, growing that so, I've got my own personal wage, my brother's got his own personal wage, but then the profits are all in that company. Are you just, because obviously you would then pay corporation tax on them profits. How would it be more efficient building that wealth elsewhere, doing that, and not simply leaving the money in the business, growing that business, paying the tax on it, but obviously the money's constantly in that business, and then at some point, obviously, you would take it out. But how do the two vary,
Yeah, good question. And it's a personal choice, really. People may grow to wherever they think their ceiling is, and they start getting sick of the business. They start always problems. You say every day, all day. There's someone's calling in sick, or customers are shouting at them on the phone.
Yeah.
Start getting sick of the business, or just reach a point where they're happy with where it's at and they don't want to continue to grow because they feel that there's going to be more problems on the next step that they don't want to deal with. So it's when it is a personal choice, and it's when they want to stop.
So what are the tax implications between the two then? So
tax implications.
Yeah, so regardless if someone wants to stop or not, if I've got all my money in the business and I've left it in the business because I've not taken it out, and obviously paying corporation tax, it's just sat there growing, or I've started shifting it about and moving these other companies, building these other companies or buying these other companies, is there more tax efficiency doing it that way or just keeping it as that one business?
No, tax is basically the same in that situation because you still pay corporation tax on your profits within that trading company, within RedClean. But it's tax efficient if you compare it against taking money out and investing it in other businesses or investing it in property.
Oh, so I understand it. Yeah.
That's when you would do that.
Because then obviously you'd pay the corporation. You'd pay the personal tax because you're taking that money out as a personal expense as opposed to having it set up as a umbrella company. Is that right?
Holding company, group structure. It's called.
Okay, group structure, and then I understand that now. So that's good strategy. Have you got any more sort of tax advice, tax strategies?
I mean, I think your first question was what advice would you give to people starting out? And I know we've gone all the way to the top there because we're talking about tax. And in the UK, there is very limited things you can do with tax. There's certain things when you get richer, but at the start, there's not a fat lot you can do, to be honest. There's those few things that I've said, and that's pretty much it. Some more maybe around that level. But the advice I'd actually give is nothing to do with tax at the start. Because like you said, you want to keep your expenses lean. There's no point just splashing out on assets that's not going to be fully used in the business. It's just making sure that money's... The first thing is actually learn as much as you can about marketing. And because I believe that that's probably the most important department in a company. Customers. There's no business without customers, you know. And people will focus too much on tax and expenses and overheads, whereas if you the problem number one is, are you getting enough inquiries? And if not, then it should be your main focus. And I think that's probably the actual advice I would give, because if you don't have more inquiries, then you can't hire, and it just causes all types of headaches and stress.
I'll put my own personal spin on that, because obviously I've started from the ground up. I've started from literally a van and done what I've done. But one thing I would personally say is that, and maybe it's because I've got more of a sensible head being at 47 now than 26 or whenever it is when I started. Yeah. I was much more reckless. I was much more full of energy, adrenaline, that sort of stuff. And just coming from a wiser position, the thing I would personally say is, whatever you're making, try and put your 15% away or 20% or whatever it is. Because I made the mistake for many years of just going at it. I'll sort the tax out, going at it.
And it catches up.
Yeah. And I tell you what, for mental health, it is terrible, to have what you believe people breathing down your neck all the time, which they do and they will. It's terrible. I mean, like I say, we dance the dance as we do now, like I say, even at the size we are, we're still trying to find that balance of growing and developing while still being able to make our commitments. But very much in the first 2 or 3 years, when it was just a man in a van with loads of inspiration, of course, I sold a car that I had at the time to go and get some door knocking done and build some business, and definitely went down the route of getting a cheaper van, the cheapest van I could to start out. But definitely for your own sanity, and even if you're not looking to plot, forecasts and all of the complicated stuff that we do now, is just on a simple level, is to put that by. Like a quick example of that is my daughter has started up just baking cakes. And as simple as it is, all I've said to her is, at this present moment in time, you've got what the cakes are costing you, what the cakes are that you're selling, then there's your profit. So if it's your order was 200 quid and it's cost you 100 quid for your ingredients, you've now got £100. But £20 of that away. I know she's got a tax allowance at first. She's going to have to make 12 grand or whatever it is.
More than not enough.
Sorry,
Percentage of more than not
exactly.
enough, yeah.
So just as a basic point, definitely do that. From my experience, because like I say, it's so easy to go, well, I've just got this deal, or I can do that, and I can grow there, and then once I grow there, then I can pay that.
It never. That's a mindset that never goes.
Yeah.
Until it catches up with you.
Which it has done.
Yeah, and
I ain't gonna lie.
Yeah, and then people learn from mistakes usually. They make the mistake.
I know, without a doubt. Yeah, you definitely learn from your mistakes.
Yeah, put money away. Absolutely.
Yeah.
Put more away than you need to.
Yeah.
People. So I obviously have many clients that don't do that, and it causes a lot of stress not having any money. Plus, VAT registered companies who spend the VAT and they don't put any VAT away, as well as corporation tax, and then also personal tax.
Yeah.
For your mental health, that's horrible.
Yeah,
that's horrible to be in.
It's very hard to stay on top of.
Yeah,
because as we were talking about earlier, the demands from HMRC are just ludicrous. I know everyone faces it. Everyone has to go through it. But it doesn't take away from the fact how much they take from us. And not just through businesses, but through personal as well. Bottle of water you've just drunk. What's the tax we paid on that from what we bought today? It's all the way through. But regardless of that, it is just trying to be, as sensible as you can, especially if you want to build that bigger business. If you want to stay a one-man band, obviously, that's the way I would do it. I've never been that way in terms of staying in that position, but it's just being as simple as that, But
that's good advice. It is very important to do.
Yeah,
very important.
So what would your advice be then? Say you've now gone and bought a van, and it could be, you're a plumber, you're an exterior cleaner, whatever it is, and you've now got to that position, you're just under the VAT threshold, you're doing okay, but now you want to go above and beyond, and you want to move into, I want a 200, 300, 1 million, business, 2 million, whatever it is. Is there is there a system that you would say to follow to make that break from when you are just under that VAT threshold to then go above and beyond it?
Absolutely. I mean, it massively. My answer to this massively depends on whether you have residential or commercial customers. If you have only residential customers, becoming VAT registered there's much more steps to it. It's harder. It's not impossible, of course, but it is harder because now to these residential customers, you're 20% more expensive than
if you pass it on.
Yeah, if you pass it on. And if you don't pass it on, then you've also got less profit. So you're kind of stuck between a rock and a hard place with this one. So firstly, I'd probably recommend, if it's just residential customers, test a 20% increase on your customers before you hit the VAT threshold. Make sure you're tracking that VAT threshold as well. If you're a sole trader and you are under the VAT threshold and then you register a limited company, you can kind of reset your turnover. Whereas if you hit that threshold as a sole trader, you have to register straight away as a limited company. That's a little nugget as well. Firstly, test 20% increase on your customers if they're residential. If you're commercial, then you should have been VAT registered before because you're missing out on claiming those expenses, the VAT on your fuel and tools, whatever. The residential guys, especially for exterior cleaners and plumbers, actually, once you're a sole trader, obviously you're mainly probably going to be working on residential customers. Test at a 20% increase, I would say, and see what the results are from there. If you can't get away with a 20% increase, try a 10% increase. So then you're swallowing some of it. But this obviously depends on how much profit you're already making. Yeah. So if you're barely making any profit and then you swallow a 10%,
hard.
Yeah, it's you ain't going to have enough to pay the bill. So yeah, that price increase is big to manage, and don't ignore it. Don't wait until you have to be a VAT registered. Now you realise you can't pass the extra on, because then you'll go into trying to avoid the VAT, and then again it will catch up with you one day.
Yeah.
So that's probably my number one piece of advice.
So that's just going through the VAT threshold.
Yeah.
So from my experience, like making the decision to go through the VAT threshold, I'm going back many years, and if I'm honest, I went up, screwed it up, come back down, went back as a sole trader, and then went through it again. Within our industry, exterior cleaning, you just had to go so far beyond the VAT threshold to keep the standard of living that you've got,
to be at the same rate you are
Yeah,
now.
and then obviously to then try and build and develop from there, you know.
About 150k after you hit the VAT threshold if you're swallowing the VAT.
Personally, I would have said more, you know, but
Just to be the same.
Yeah, just to be the same. I mean, like I say, I'm going back many years. I didn't write it down, or do you know what I mean? There was no strategy to it. It was just headless chicken, off we go, you know. But it's it was just working out what the where you are with the VAT threshold. So you think it's kind of double, because what is the VAT threshold now? About 80? Is it really? Because it stayed stagnant for about 5 or 6 years.
Yeah, and it went up five grand, which is not enough.
Yeah, totally not enough. Yeah, considering everything else that's gone up with.
Yeah, it makes it's a very stupid threshold. It makes it so hard for people around that situation.
Do you not think though that they keep it that way because they
I do.
They don't want people to be sole traders?
We could go into these conspiracy theories, and I'll be
it's
here.
not a conspiracy theory though.
I'll be here all day because I'm the same.
I've got the memory. No, I haven't really. But no, yeah, it's.
I do. I think that's probably a part of it. Make it as hard as possible for entrepreneurship.
Yeah.
And it is hard, especially with more tax increases coming for employers, which just ends up getting passed down to consumers, like the general public. Yeah, we could go into that all day. It is making it increasingly difficult for entrepreneurs.
So we'll take our tin foil hats off, and we'll go back. So so you think about double to be kind of where you are. It would a rule of thumb, would that be correct?
Yeah, I'd say roughly. I mean, it's obviously different depending on profit. It's profit that's the main driver. With
so how would again, because obviously I'm talking from my industry or our industry, external cleaning, window cleaning, whatever you want to say. But so from like a plumber's perspective, I mean, the way I would obviously see that, if you're a plumber, you need to really be VAT registered, because you're going to be buying boilers and pipes and stuff like that. You're going to be over that threshold quite quickly, aren't you? Because your invoices are going to be a lot more.
Yeah, your materials.
Is that what you kind of find, or because you started speaking there about plumbers and what advice you would give for them being a sole trader, so to speak? You know?
Yeah, I mean, it just depends. It massively depends on profit at this point. If you've got staff, obviously most of your profit's gone under that VAT threshold.
Yeah,
but obviously people don't be VAT registered until they have to, for the 99% of people.
Yeah.
Unless they realise that I can actually claim all my materials here.
Yeah.
And it just depends on what you can get away with charging. Because if you can't get away with that increase, you've got to factor that into as VAT is a cost at that point to your business, essentially.
The domestic, it is difficult. I mean, what we've definitely found as we've got bigger, we can charge a lot more money. And purely because obviously we believe, and it seems to be the case, that it's image, it's the vans, it's marketing, it's all of that, and
200 and something Google reviews.
Yeah, 280 odd, I think it is, at 4.8, and so yes, I think that was my Ring doorbell, but don't worry about that. Now I've lost my trail of thought. So what were we talking?
Image and what you can charge better,
So I'm just saying that we're definitely able to push the boundary on domestic prices. I mean, we get it every single day where a customer will try and sign up, and we'll give them a quote of 25 quid. My last window cleaner charged me a tenner, or 11 quid. So I understand it's hard to try and push them boundaries up, especially when you're at that sort of threshold. But it does need to be done. I mean, us personally, especially on the domestic front, we don't factor in VAT into the cost. We just know that our daily targets need to be X. And because we hit our daily targets, then we know, obviously, with the VAT, we work the VAT backwards from that, But yeah, so I do understand it, and I do understand. But from my perspective as well, though, when I speak to a lot of other sort of sole traders and littler guys, sorry, I didn't mean littler guys as in any derogatory term, but I just mean guys that have got smaller businesses. A lot of people seem to live in fear as well, and they're worried that if they try and push it up 20%, that they're not going to take it and they're not going to do this. But in my experience, you just got to be a bit more fierce than that. And like you said, test the waters, put it out to a few people. But yeah, it's just trying to get that level of money back in to make sure you're not in a worse position. But then you've got to think about going above and beyond how quickly.
Oh yeah, and quickly as well. You've got to be quick about it.
Exactly. Do you know what I mean?
If you can actually charge VAT to customers, then it's not so much. You're in the same position then.
Yeah.
But if you swallow the VAT, then you need to go quick.
But I suppose, again, from the perspective I'm coming from, is like you said there as well, you're only then limited, like if you go over the VAT threshold, you're only then limited to the amount of time that you've got that you can go and do on the tools.
Yeah.
If you then want to employ and everything else, you know, you're still going to be in a worse position because obviously you've then got all them costs as well. So it is about trying to get up above and beyond. When people ask me about the VAT threshold, because I get quite a few questions from different people, I've always said, and for me, the figure in my head's always been 300 to 400,000 in our position to be able to be a sustainable business, to absorb the VAT and all the costs underneath it, you know. Again, it's not like anything I've worked out. It's just something.
Well, I mean, at that point, you do have to take on staff as well, because you're going to have to increase your customer base and then increase.
I just mean
staff.
getting to that point and getting to it quickly. Of course, you take people on, you know.
So I mean, in that growth stage, your profit margin is going to be much lower.
Yeah.
Because you're investing so much into people, into marketing, into admin softwares, CRMs. You know, there's profit's going to be lower. So because profit margin is going to be low, you do have to factor that in with the where your turnover goal should be. When I say 150, I mean if you're just at the exact same level now, and you just swallow the VAT.
Yeah, I suppose the only thing I'd say from that is, especially from a window cleaning perspective or even exterior cleaning, to do 150 grand on your own, you're going to need some business, you know. I mean, you can definitely do it. There's no two way about it, but you're going to need to. It's not easy, and you've had to have had years of developing your customer base and understanding pricing, good at your job, and blah blah blah. So to try and take that leap, I understand why people stay just under the threshold, you know, but for ambitious people who want to, you know, carry on.
It's not a choice to,
and I think you just have to just absorb that as hard as it is.
Work around it,
just go for it, you know. Yeah, it'd be great to talk a little bit about growth and scaling a business. So, you speak with, you do the accounts for a lot of different businesses. So, what size businesses do you work with, and have you taken any businesses from say X to where they want to go, or they're on their journey? It'd be great to talk a little bit about scaling them businesses.
Absolutely. So, answer your first question: do we work with? We work with many businesses. We do only work with trades and construction within the.
Why is that? Before we go on to the scaling part, why is it that you only work with them businesses?
So there's two main reasons. One is because I have the first-hand experience within like a service-based home service. It's not so much construction, but it is a little bit very similar in terms of like marketing and systems processes. That's number one. I have actual experience. I understand the customers, I understand the people you have to work with, subcontractors you bring in, etc. Number two is because accountants shy away from people in the construction industry. I've spoke with accountants, and obviously I speak with them. I only work with in the construction industry, and they say that would drive me mad. They say that because it's so different. It seems they're so different that an accountant and the construction could just never get on, really, but as a stereotype, you know. And they can't. It's very hard for an accountant mind to talk to a construction entrepreneur who's just, like you said, just thinking about growth, got the vision of the big house that they've developed themselves, and it's hard for an accountant who's very risk adverse to speak with these people. Whereas I've grown up around these people my whole life. These are my friends, you know. I've got lots of mates in the trades, plumbers, electricians, actual just normal people, you know. So those are the two main reasons. I can just speak well. I get along with people in the construction industry.
Okay.
And obviously I've got first-hand experience with it, so I know how to model different scenarios, manage the profit margins, understand that what we should track from a finance point of view to actually get these systems in place to scale. Those foundations, I understand what it needs in construction. Yeah, I would say that's all.
Yeah, well, it makes sense. I would have thought working in the construction industry probably would be difficult, you know.
It's difficult, but it's not as difficult as it seems.
I mean, I'm seeing so much on LinkedIn, again, because we're exterior cleaners, we sort of touch a little bit within the industry, but we don't know, we don't dabble too much, but it just seems like it's dog eat dog, and there's a lot of people not paying other contractors and waiting until they go out of business and stuff like that. So yeah, it seems like it's a bit of a dogged world, you know.
And actually, there's a third reason, and it's because I need the most support as well. So it helps me because if I was to work with like a marketing agency, for example, or like lawyers, they would kind of be like they know it all in finance, even though they're not in it. Construction, they just want it hands off. They just want it to be dealt with. Yeah. So that kind of helps us. You know, we can just take it off their hands and actually give them a good service, give them the support they need with this, because there's more taxes as well in in construction as CIS and reverse charge VAT. There's different tax implications in construction, and I've got general accountants who just work with anybody and everybody. They'll pass me work from their clients who are in the construction industry, just because it's too much work for a generalist to do, because they'll have to research too much, and it just takes their profit out basically.
Okay.
So yeah.
Okay, makes sense. So yeah, going back to the previous question about growth and strategy. So you've got clients that you work with, and you've taken. I mean, have you got any examples of someone you've taken from X and moved them to Y, or?
Well, I mean, my role in a business's growth isn't so much taking them from X turnover to Y turnover. Rule number one is obviously making sure they're tax efficient. So it depends on where they are. That depends on how I approach that question, getting them tax efficient. Then it's just about giving them the financial data. So firstly, it's about getting them off the tools, getting them off the tools if they're looking to grow, of course.
Yep.
Getting them off the tools as early as possible, listing out all the admin stuff that they do, because that's the easiest to outsource. And then obviously looking at contracts managers and project managers and stuff. So firstly, it's just about taking off the tools. So that's the type of stuff I help them with, because that's all financial data tells you if you can do this stuff.
Yeah.
Your profit and loss, balance sheets, your cash flow forecast will tell you, can you afford this next member of staff? Will it give you any time back, and what can you do with that time? So it's not so much I do have a role to play in it, but it's a smaller role, because I'll tell them they'll find them the good marketers. We do have marketers or tendering support, etc. in our network that we can tap into, but they grow the business themselves at the end of the day. We just make sure they're tax efficient and give them the good financial reports. And then, so like I said, when you're at like 1 million or even 500k, having a sit down with me, I do this type of service with me every month. We'll go through the budget. So we'll create a budget for them when they come on board. So when we're talking about scaling now, this is where this is my service that I love to do, rather than the tax and the accounts and the payroll. This is about financial reports, financial data, KPIs. So when they come on board, we map out their goals for the next 12 months, and we'll create them a budget around what the business is currently doing, what they need personally out of the business, and what the profit and loss and the accounts need to look like for them to be at that goal in 12 months. So then every month from there, we'll sit down against the profit and loss, compare it to that budget that we've created, and say, this is working, this isn't, and just come up with solutions to these problems. What financial data does is gives you where to look for the problems, where are the problems specifically, because like you said, there's so many problems every day, all day, and you don't know which one to tackle first. Sometimes it's like you're just kind of firefighting, you're waiting for a problem to come and then you fix it. Whereas like analysing these profit margins, analysing your budget, how far away are you from your goals, and for you especially, like businesses where you've got like multiple vans on the road, how many? 17 you've got?
Yep, 17.
So like for something like that, I would definitely recommend like breaking down how much profit you make per van. Do you do that at the moment?
I know them figures.
Yeah, good. Yeah. So when you start tracking all this financial data, which is why actually, once you start, I'll come back. Once you start tracking this financial data, it tells you where to look in the business. So is the problem, because the financial data is one thing, and then your KPIs are one thing. But once you start managing these and tracking these, you measure them. There's a saying, what gets measured gets managed. I'm sure you've heard it.
I haven't, no.
Yeah. Well, there you go. There's something from me.
Learn something new every day.
There we go. So, yeah, I think on a scaling point of view, you just need to measure financial performance. What that means is your budget versus your profit and loss. Your cash flow forecast. Cash flow forecast just means, for anyone that doesn't know, is you can kind of predict, especially with recurring revenue, like window cleaning. It's perfect accountancy practice. Perfect because it's recurring. And you can, if you've got a good cash flow forecast, you can look in 1 week, in 3 months, how much cash you're going to have in the bank, and that tells you how much you need to actually keep in the bank for one, and it tells you how much you've actually got to spend. So going back to earlier when we was talking about people just spending for spending's sake to decrease tax, that's why if you had a cash flow forecast, you'd understand you can't do that. Obviously, at that level, cash flow forecast, all those reports are a bit. There's no point in them.
Yeah.
But when you start growing at your stage, I would say, even way before your stage as well. 17 vans is obviously great. So well done as well for that.
Cool.
Yeah,
Cheers.
that's good. Good stuff. But even from like 3 vans plus, tracking profitability per van, seeing which vans perform the most. Then you also track things like how many Google reviews, how many callbacks. So these are KPIs. How many Google reviews, how many callbacks you get in, profitability per van, how much it costs to acquire a customer, how much a customer pays you in profit over the span of their lifetime value we was talking about. Against, so that's all. Yeah, I think I'm jumping from A to Z a lot here. But
seems all right. I'm keeping up with you anyway. So,
okay,
yeah.
fantastic. So, yeah, because we're talking about scaling. So what my point is financial data is great, but it's not going to solve all your problems. You know, the financial data gives you where to look and what to focus on. And once you focus on, you understand where the problems are in a business, because that's what it will tell you. Mm-hmm. You focus on, you find the problem there, and then you create the solution for it. And then you do that month on month on month. You're always improving the performance of the whole business, but it's from initially that financial data. Mm-hmm. So when we come to the question about like scaling and how I take, like if I've taken business from 1 to A to Z, then this can't be done really from just financial point of view. This is just me sitting down with businesses. Like I said, we've got companies mainly sub 1 million. Before pre-1 million, that's the majority of our clients.
Okay.
But we have got clients 1, 2, 3, 4, 5, and the 6 is the maximum.
Okay. So what advice would you give to someone who's actually maybe in trouble with HMRC, or someone who can't afford to pay their costs? You know, they've not made enough money, or, you know, is there? I understand it'd probably be a case by case kind of thing, but if you're in trouble, what's the kind of first port of call I guess you would go for? You know.
So if you've received the letter from HMRC with an investigation.
Not necessarily an investigation, but I don't know, say you're running a business, or things are getting away from you, you can't afford to meet the liabilities of HMRC. Is there sort of advice that you would give to someone? I guess maybe, I don't know, maybe people could stick their head in the sand, maybe try and avoid it. Is there any sort of, I don't know, just some information about if you are struggling is probably the right word.
Absolutely. And it comes back to what gets measured gets managed. We firstly need to understand your position, how much, if it's tax, you've got loads of tax outstanding, for example. You said it's case by case, and that is true. It is case by case. But let's say it's tax, and you've got loads of tax outstanding, you haven't paid for the last few years, you got VAT returns overdue, you got payroll, PAYE and national insurance. Like, overall, you just haven't been paying any tax, or you haven't paid some of the taxes. First, we need to know how much is it. Then we need to come up with a way to pay it. Basically, that's the end goal. We need to pay it. You need to pay it, or you need to wind the business up. Those are the two ways out of it.
So I mean, have you dealt with HMRC with that, like trying to come up with deals or anything that? Or so how would you find that? So if someone's got, I don't know, a liability of 50 grand, I'm just picking a number out of the sky, they can't afford to pay it, they've got no way of paying it at the moment because business isn't doing well enough. What would be your process with that, you know?
Firstly, they've got to speak to HMRC. You have to speak to HMRC, and an accountant's not allowed to set up like direct debits or anything, because what they'll ask you for is how much profit you're making, how much income you're generating, how much expenses you're paying. So that'll give them your affordability. And that's something that needs to be worked out with HMRC. So it's a direct debit, essentially. They will work with businesses. So if you've got 50 grand overdue and you're only making, like, you're breaking even every month, you'll have to tell them that, and they will propose something, and then you have to take it from there.
Okay.
But yeah, there's not much more you can do than either wind up or pay. And you can pay in installments. HMRC will let you pay in installments to get you up to date. They just want their money, you know.
So have you actually worked with anyone where you've had to like restructure, or someone's got a lot of overheads and you're just trying to get them down, or
So when I talk about those like more strategic monthly meetings with the profitability, that is one of the things. Obviously, we lean down the overheads to where there's no waste. Well, I've mentioned this on LinkedIn the other day, where I'm not sure if you've seen it, but when I said accountants will mainly focus on those overheads, and that's because that's all they're taught to do. That's all we're taught to do essentially. So overheads is great. We need to lean them down so there's no waste. Are you spending on marketing that's not generating a return? Are you spending on staff that aren't pulling the weight? Like we just need to lean them down so there's no waste firstly. But then it's more about actually generating profit and just decreasing overheads. Usually smaller businesses, there's not a huge amount of overheads that people are paying anyway. They might be wasting money on, especially marketing, because people will just sign up to a marketing agency and not track the performance. When we actually track the return on investment, if it's like a paid ads where there's a direct return on investment, and then there's nothing. So there's stuff like that. But other than that, it's about making sure you've got healthy pricing, and then getting more customers on that pricing. So good pricing and more customers who pay the price that you're worth, and that's where the focus is. So then it becomes more about that. But the first step is technically leaning them overheads down, I would say.
Okay.
If that answers your question.
Yeah, it does. It does. I've probably got a counter-intuitive one for that, but just from my own experience. But we've got ourselves into a position before, and we've actually done the opposite, not leaned down, but powered through, we wanted to keep the overheads where we were. We didn't really see there was much trimming.
That's it. That's my exact example.
But what I'm saying, there could have been trimming, but because of the setup we've got and the team we've got, we didn't want to trim. We wanted to push through, and we were able to do that,
that comes to that point where you get healthy pricing and more customers on that pricing.
Yeah.
That's how you power through, really.
I think it just comes down to your individual as well. For me, I think, as my brother said earlier to you, failure isn't an option.
Yeah.
And we just, I don't know why, that's just it. You can rejig, you can sort things out, and if you have to go down liquidation routes or whatever routes it is that you need to do, you can go down them routes. But I think from our perspective as a business owner, failure isn't an option.
Yeah.
Regardless of whether the business does what it does, it's just about moving forward and going forward. But but of course, saving expenses if you can. Of course, you should do that anyway, shouldn't you? But of course, if you're restructuring and you can lean it off, and I totally understand it. But okay.
Yeah, I try not to focus too much on overheads. Like I said, a quick look: are you wasting? Not like removing. Like you said, you've got a team in place that you're happy with. You want to grow with that team.
Yeah.
Then you can't trim that down. You do have to go through, but it's a quick conversation on what you're spending. Is there any waste? If there's no waste, then that's not an option. Forget about the overheads. But I came to almost say stop spending on marketing in general. Decrease your office staff. But if you grow with your plans, that those office staff are going to be needed within the next few months. Then.
Yeah. I think the other thing that's always been difficult as well, especially within window cleaning, and that is, and some old accountants we had could never get their head around this, is that you have to spend. If you don't spend, you just go backwards.
Yeah.
Especially at the size that we were at the time, soon as you stop that, or they're like, oh well, you can save $8,000 a month there, or $12,000 a month, or whatever it is. But as soon as you put that stranglehold on it, within 3 or 4 months, your turnover would just depreciate by about 30-40% potentially. I'm picking numbers out of the sky there, but that's the problem with some of this stuff is that when you look at, you want to try and cut things back. Obviously, the first thing you'd probably look at is staff and marketing, if that's where you're spending. But of course, from a marketing perspective, especially in our business, you have to have that budget.
Yeah.
Otherwise, you'll just simply go backwards anyway. So you try and trim the fat off of it, but actually you're going to do more damage than good,
Yeah, and it's funny you mention that because that's the exact post I pulled up on LinkedIn a couple of days ago.
Really?
Yeah, so an accountant, you've got to think, an accountant doesn't need to market too much. They don't need to have marketing budgets for the most part because our job is a legal requirement. There's no better business model than that technically. Mm-hmm. We are trying to do something that's everyone needs. So we're in a very fortunate position where business owners will just fall in our lap. Companies need their accounts done every year. Company has payroll and VAT returns every quarter. They need an accountant. And it's too complicated to do themselves or too time consuming to do themselves. So when an accountant sees £5,000 a month spent on Google ads, it doesn't make sense. It's not normal. That's the first line I look at. But I am always looking to increase marketing because that's the way you get through. The important thing is good marketing, of course. Marketing where you actually get in a return.
Mm-hmm.
But yeah, that is a very, very good thing to say, because you need to be careful of advice you do take from accountants.
Without a doubt. I think it's it was on like Dragon's Den or something. I'm not a fan of Dragon's Den, if I'm honest, but like I remember seeing it once, and I think one of the dragons actually said, you know, you take your advice from the accountants, but you have to know your business.
Yeah, yeah.
You know, obviously you're there to guide and to help with the taxation and everything else, but you're the entrepreneur. You should know your figures and you should know where you're going. You know.
Yes.
So
The thing I hear is, or you probably heard it yourself, my accountant deals with her.
yeah.
You know, and that's dangerous game to be playing.
Without a doubt,
Very dangerous.
Yeah, you got to know what you're doing, and it is difficult. You know, not gonna lie. It's like, as I said to you a little while ago, that listening to an accountant sometimes can be tricky,
Daunting and
Probably
annoying.
Annoying. But you do need to know. You need to learn it. You need to know exactly where you are and what your numbers are and what you're doing. You know?
Yeah, and I think that saying, knowing your numbers, is hard to understand for people that have never been in business for too long, or that haven't had to know the numbers, because that's like a saying that's like thrown around, and because it's very important, you do need to know your numbers. But what that actually means to the average business owner, they don't know.
Yeah.
And that's just knowing your profit, knowing how much cash you're left with each month, knowing your return on marketing, mainly for service-based businesses, well, all businesses, and just knowing the KPIs in your business, gross profit, understanding as well, not just knowing, because there's no point just knowing. You have to understand gross profit, understand profitability per van, understand your churn rate as well, like especially for window cleaning, I was talking about earlier. You need to understand how much income you're losing each month, because if that don't get replaced, your turnover, your business will go under just from churn alone.
Yeah.
So yeah, knowing your numbers is knowing just financial data. So that's where, when you said earlier about like the taking a business from turnover Y to turnover Z, that's just knowing all of that data. Just work with somebody, because you're not going to get it yourself as well.
Yeah. It's good advice.
Yeah.
I think on that note, it's a great point to stop. So,
Fantastic.
But it's been really good meeting you today, Conor, and thanks for coming down and coming on. And hopefully you found some use, or well, hopefully a lot of use. I think there was actually some really good advice there. So, yeah, if you could please like, subscribe, and all that lovely stuff, that would be great. And we'll see you on the next one. So, thank you very much, and see you later. Bye.